Hi everybody, it's Bob Iaccino. Welcome to the weekly review preview. Again, a little bit different. I want to mention two things before we go into what we're looking at, because to be honest, we have some recommended trades that are still open, but I don't have too much that I want to do given the way that the market's closed from a longer term perspective. But having said that, last week I sent out a blog about what I feel is the likely scenario for Europe, and that's a United States of Europe. And I got a lot of emails that sort of took the spin as if I was in favor of a United States of Europe. One thing that everybody needs to know about me is that I am opinionless in these things when it comes to markets. I could care less if there's a United States of Europe. I could care less if the euro breaks up, because that's not what I'm here to do with you guys. I'm not here to give what my personal opinion is. The reality is I do have an opinion of these things. But I'm not trying to promote one or the other. I just feel like the United States of Europe was in the plan from the beginning. And those same sort of special interests that some people seem to think that I may represent have a lot of power and have a lot to gain from a United States of Europe. That's why I think it may be inevitable. And I think it was in the design from the beginning. And I think the euro was set up in such a way. And by the way, George Soros put out a piece at the beginning of last week where he basically agreed. He thinks the euro was set up in order to have a combined government in a very quick fashion, but they didn't expect this kind of a crisis to take place in order to add to the issues with doing that. So not my opinion of what should happen, my opinion of what will happen. Now, we have another geopolitical event focused in Europe going on. We actually had two small ones this week. Europe trying to invoke their NATO rights to be protected from the conflict with Syria, and the French presidential election, which takes place on April 22nd, with the very large fear from the financial markets of the potential election of the socialist Francois Hollande. I'm not sure if I'm saying that correctly. I know I'm saying Francois correctly. He is a pure socialist and nothing but a socialist who was once quoted as saying, "I hate the rich," and is discussing his plan very openly for raising marginal tax rates in France to 75% and spending even more, putting the country further and further in debt. And I think what you're seeing on your screen right now is the equity market's response to that. Now, the good news is that if needed, there'll be a runoff election May 6th. So that buys time to see the market's reactions from a perspective of trading. Having said all that, you can see that in the S&P at least, this longer trend line that began in October of last year has held. We have an initiating point, a defining point, a brief collapse toward that level, which had initially produced this trend line for us, but which has since been broken with this trade right here. So we can actually get rid of that one. Looking at the longer term trend line now, you see that the market tested it, rallied up, tested it again, rallied up, and still has had trouble closing below it. This is on an S&P. So what do I think is going to happen here? What do I want to see happen? Well, I don't think anything's going to happen. I don't want to see anything happen. I am a trader of what? I'm not a trader of why. I don't look at why things happen. I look at what I feel is going on and what my trading reaction to that is going to be. And I feel like there's a decent chance that we can get a close below this low here, a run down to this low in the S&P to this 1343 area. That's not a really bold call. Okay? Now this is a daily chart. If I jump over to this shorter term S&P chart, I have it somewhere. Here it is. What you have here is a very, very borderline double bottom reversing this move up here. You got to close above that double bottom. This is a 60-minute S&P chart. So what does this mean to me from a trading perspective? It means to me that we have a high probability of reaching around 1410 before we close on an hourly basis below 1369.50. That's all it means to me. So what do I do with something like that? Nothing. I get long here. I'd rather get long around these moving averages here, but you could get long here if the risk reward was correct. Initially it was not. You had to wait for a pullback if you got long here. If it closes below, again, this 1369.25 area, then you're out of the trade and your risk is calculated, and that's that. That's the end of it. Otherwise, you're looking at this 14.1076 area. So jumping back to the daily S&P, what does that 14.1076 area get us? Only right about here. Not even up to those new highs. It gets you up to this old peak of the body right there. Okay, and that's plenty of time for the market to rotate down. Having said that, the likelihood of a move off of the French election is probably going to be muted. We have a NASDAQ composite which has the same pattern. However, we're looking toward a daily close. We haven't quite closed yet, but if we get a daily close below this blue line right here, which falls at right about 1303, which it looks like it might do, if it does that, then this pattern, which never triggered, is negated. These two arrows pointed to a rotating double bottom reversal pattern, but a trigger for me is a close above the high. That close has not happened, so there's no trigger of a long there. I was on CNBC Tuesday. They asked me what I thought. If earnings come in strong, where's the market going to be at the end of the week? And I said lower, even if earnings come in strong. It's on record. You can look it up. You can see it. Why did I think that? Because of the charts, for no other reason. We have a short recommendation on gold that we took all the way back on the 4th here at these lows. So this is another illustration of market noise and why I don't let it affect trading. We had a trigger right here on the, it was on the 5th. We had a long trigger right here. Okay, the market has done nothing but go into our face, but has not reached our stop, which our stop recommendation is about 16.99.29. We are still short gold. So we struggled through this, and now it's moving back our way. If there's some sort of colossal reaction to the French election of a socialist, you can expect gold to collapse initially as well and then rally back. That's plenty of time for us to get to profitability on this trade, but if not, risk is assessed and risk stays in place. Here's the interesting part. Euro strengthening against the dollar. So what does that tell you? That tells me that the Europeans don't have a tremendous amount of fear of this election, that it's mostly the Pacific Rim and the North and South Americans that have a fear of the French presidential election. The euro is actually rallying into this. People are covering euro shorts. Okay, they're bringing back money to Europe. They're shorting the dollar. You can see it as well in the Aussie US dollar. You saw a little bit of collapse over the last few days where they're shorting the dollar again. Short dollar is a strong economic prospect. Do I predict the French election off of that? No, because I don't feel it's that big of an event in the short term. What tells me that? The May 6th potential runoff. I think this election is going to be closer than people think, and I think we'll be looking toward a May 6th runoff, and until then, we remain short gold with nothing else on the horizon in terms of new trades, at least for the week. Sometimes it's best to keep your powder dry, as they say, preserve your soldiers. All systems are not go for a trade. So we're just going to look and wait and see how the markets play out next week. Sometime around Tuesday or Wednesday, we should get a direction out of these markets. This is Bob Iaccino. Thanks again for being here, and I will speak to you guys next Friday.